It's a view from the floor here at the New York Stock Exchange. I'm Michelle Yu, joined by the founding partner at SkyPath Private Wealth. We have Kevin Pearly here. And Kevin, let's dive right into this and talk about AI. AI spending is moving stocks fast. How can investors diversify without missing the rally?
Well, thanks, Michelle, for having me. And they sure are moving fast. I mean, you could see even today what happened with Google and their AI spend. And what's happening is, generally speaking, clients are viewing it as just a one or two stock piece, but they can get broad diversification through index funds, through sectors to get a broader exposure as opposed to just one or two individual pieces. And what we have found is some of those individual stocks that they've held for a long time have outsized gains. And they know they need to diversify, but there's a fear of missing out if they sell, and there's also the tax piece. And there are some creative ways to get through the tax piece, but they really can get broader base exposure to play this AI spend.
Are recent pullbacks a sign of overheating, or is that just a healthy market volatility?
Volatility is just the way of the market. We can't have things just go in one direction, straight up or straight down. We view this as a healthy correction. It's also a testament to show that, diversification does matter and stocks do go down. For a number of years, stocks, just a handful of them, have really been just one way. And a lot of the other names within the S&P 500 have been forgotten about. Well, now we're starting to see broadening of the marketplace, which is better for all stocks in general and for investors.
Let's talk a little bit about what it means now to have higher for longer in bonds and cash these days.
Generally speaking, cash is now an asset class. And for the last several years, investors have been paid to sit in cash. Now today, we're seeing a 10-year at 4.7, which, yes, it's been a year ago here, but we have to almost go back 25 years for that. The challenge with sitting in cash for a large portion of client portfolios is inflation. The dollars in our pocket today are not worth what they were yesterday, let alone a year and 2 or 3 years ago. So yes, it is an asset class, but it has to be just a small portion for one client's goals.
Should investors these days be rotating from mega cap tech to small markets or international markets?
Yeah, it's a great question, and it's being talked about a lot now. There certainly is the home country bias versus, if you're living here in the U.S., you're majority invested in the U.S. There's over 8 billion people in the world. We do need to think globally and internationally. However, that doesn't mean wholesale changes and blow up your entire portfolio. But selectively going into international markets and thinking globally is best for investors.
Clearly, there's a lot of geopolitical tension still going on around the world. What is the one rule for investors when it comes to making emotional decisions?
Yeah, that's the biggest thing I feel in our industry is keeping clients at bay and taking the emotions out. The biggest predictor of financial success, in our opinion, is behaviors. And the behavior of when you save and when you invest and staying out of a lot of noise and setting a financial plan when things are calm. Maybe not based on today. Today's a little bit of a volatile day, or when things are very euphoric. But stocks tend to go down real fast, easily, but it takes them a while to go up. So taking that emotional aspect out is the greatest predictor of financial success.
Kevin, thank you so much for joining us and giving us your insight.
Thanks for having me.
And that'll do it for us here at the New York Stock Exchange with a view from the floor. I'm Michelle Yu. We'll see you next time.